podcast on the planet, Realty Talk. We have a very exciting episode today. A new guest. So those of you that are watching or listening, we're very excited to jump in. But before we do that, we have to do some intros quick. So to my left, the queen of the closing table. We have to ask if she's closed. I don't want to give away too much of our guests, but have you closed any Airbnb investments lately?
Ooh.
If you're the queen of the closing table, the answer has to be yes.
I mean, not lately, but I have. So
Okay.
Yeah.
We'll help you get something
Okay,
soon.
okay.
Yeah.
And I am Paul, known as Fix It All Hansen. I did a lot of fixing last week.
You did.
It feels like.
Yeah.
Yeah. But nothing with an Airbnb.
Yeah. You know what? I have a feeling that Braydon does a lot of fixing as well.
Oh, yeah.
So
Yeah, we're gonna have to pump those numbers up, guys. We'll do it. We'll do it together.
Okay, so
Yeah.
we have Braydon here from Tumo
Yes,
Stays.
Tumo Stays, yeah.
And he is a Airbnb guru. So
Wow, thank you.
that's the way I would like to describe it.
Yeah,
All things Airbnb.
Is that his nickname then? The Airbnb. The Airbnb.
Do you have a
guru?
nickname?
It's
I think we
Airbnb
need to-
Braydon. Yeah.
Airbnb Braydon.
Yeah.
That's good.
Self-proclaimed. No, actually, someone called me that one time, and I was like, I'm gonna put that on my business card now.
Okay, that's a good
Yeah.
one.
Airbnb.
Yeah. Okay. It usually takes us a little longer to establish these nicknames, but I
Yeah.
think that was perfect.
Wait, do you like being like segmented into just Airbnb? Because that's one of many short-term.
Yeah, I used to tell people I
Yeah.
was a short-term rental manager.
Yeah.
And 50% of the people were like, what is that? And so I just started saying I'm an Airbnb manager. We put properties on a lot more platforms than Airbnb,
Yeah.
but I think just people know it as the
Yeah.
Kleenex, right? So
Yeah.
it's just when you think of vacation rentals, short-term rentals, I think of Airbnb.
Yeah.
Yeah.
So many questions.
Yeah.
So many questions.
Okay, before we jump in, do we have any? Because I know you have a lot of questions.
Yeah.
But we should at least touch on the market a little bit.
Yeah.
I mean, we're going to touch on it, but we are going to say like pretty similar to the other times. It's, market has been pretty consistent with rates.
Yep.
I think, one thing that I'm seeing in the market quite a bit and more than, what we've talked about previously, I guess, I'm seeing that buyers are out there and they're looking, like the data's showing that they're still showing up to, to properties.
Yep.
They're still coming to open houses, but it seems like they are very scared to buy. And even I would go as far as even saying they'll open escrow, and we're seeing cancellations, so that our cancellation rate is through the roof. Just because, and it feels like this is it's not for inspections, it's not for the usual. It's like buyer's remorse.
Yeah, it's not price. It's not interest rate. It's just, is it right? Is it the right time to buy?
Yeah.
We had that
Interesting.
exact situation last week on a property, a very, I would say, down the middle of the fairway, kind of basic transaction. It's a nice house in Huntington Beach. It's just above, a conforming kind of first-time home buyer limit. But it's below median price per square foot, below median price in general in that neighborhood, in that zip code. And buyers just came in ready to go. And then just decided, you know what, maybe now's not the time to buy, right?
Is it because like rates haven't dropped as much as people thought they were going to over a period of time, or?
I definitely think that's a part of it. Like, something we're talking about it all the time, that we think that rates are not going down, but I think consumers are thinking rates are going down, and they're thinking like, oh, there's a new Fed coming in, and all these things that are gonna make the situation better.
Definitely consumers. For
And
sure.
then it's like, boom, war, boom, like fire, earthquake, like just all these like, crazy things happening that have really just kept rates the same. But I don't know if it's the rate, because we're talking about, buyer's remorse or buyers being afraid, and
Buyer confidence.
yeah, it really is. And I think, I definitely think war is related, but I kind of feel like that's people are getting used to that a little more.
I mean,
you know,
even
it's
in the
kind
Airbnb market, we're seeing like more cancellations as normal, and we're also seeing a lot more last minute bookings. So
Yeah.
it has shifted quite a bit where we'd see people planning 6 months ahead of time.
Mhm.
We're seeing a lot more of like a last minute booking market than we ever
Yeah.
have before. So
That's really interesting because I've felt that as well, where people are like canceling vacations, and
Yeah.
and so they're not necessarily out there buying houses. I
Yeah.
think
Well,
people are just
yeah, I mean, if you look at the course of the last 5 years, on paper, last 6 years, let's say, market was doing well. COVID hits. The first 2, 3, 4 months of COVID were really negative for the housing market. And then, real estate values went crazy. I think a fundamental of that is that we were dumping a ton of money into the economy. And so spending was way, way up.
Yeah.
Post COVID, we still have, we have that inventory supply issue dating back to 2008. So that's ultimately what's keeping values where they are today. But rates go way up, not way up, but they go from 2.5 to 6.5, which is where they're at today. Historically, 6.5 is not bad,
Yeah.
but rates, the price of the asset hasn't come back down from that 40% lift during COVID. And then consumers coming out of COVID spent so much money that, the average American consumer has got half what they used to have in savings, which is like under $800. Like the average American has less than $800 in savings in their account right now.
That's wild.
Wow.
Credit card debt is higher than it's ever been per capita in the United States. And rates and things like that aren't really helping. And so I think that it's just a lot of things that are, at play. But, our perspective, we talked a lot about it, is that the market's probably not going to shift for a long period of time.
right.
We saw a lot of volatility from 2008 all the way through 2024. And volatility can be a good or a bad thing.
Yeah.
But single family real estate transactions were never deemed as a volatile asset, good or bad. And, that's kind of why everyone in the older generations have said, buy real estate because it's steady Eddie, great investment, blah, blah, blah. Volatility has created a lot of wealth, but I think there are younger generations that are afraid of that volatility. Hey, prices have gone way up. They've got to come ripping back. In their head, they're probably thinking 2008, 2009.
Yeah.
But it's just a very different issue that we're
Right.
experiencing right now. So, we don't have the mortgage-backed security, challenges that we did in 2008. So I don't see markets shifting by 30 or 40% in the wrong direction.
Right.
I think that we'll just see kind of vanilla pricing for the next 10 or 20 years. And, what we're probably in the middle of is buyers getting kind of comfortable again with 6.5 being
What
the
that
norm.
looks like. Yeah.
Yeah. Yeah.
If rates go down to 5.5, then, we'll probably see a rip in market for a little bit.
Yeah.
But I don't know why they would right now.
Right. Yeah.
That was a really good synopsis, actually, of the market. I think about this all the time, and I'm like, oh, that was actually a good. Yeah, it was a.
Yeah.
Thank you.
You'd
Good
think
analysis.
this is like what we do.
Yeah,
you
yeah,
know?
yeah. It was just like what was well said to basically lay it all out.
I hope we're wrong, though. I mean, I hope that
Yeah.
something changes. I mean, one other thing that I think is really interesting we should talk about, because I think it parlays really well into your business.
Yeah.
And I have actually friends and peers that I've had this conversation with recently, younger generations that haven't purchased a single family residence in the past or ever before. There's this online kind of trend now where we're talking a lot about, not we, but they're talking a lot about, hey, don't go buy a single family home, go and buy an investment. Because, when you buy a single family residence, I don't think the average consumer really looks at all of the costs. You've got property tax and upkeep and maintenance and all this stuff. And so
Yeah.
they think about, hey, what's the interest rate and what's my mortgage payment going to be? But they don't think about all the extra expenses.
Right.
And in some cities or zip codes, it might be actually more advantageous to just rent.
Right.
And so if they've got a slug of capital, they're going in and buying an Airbnb in another desirable location. So they're taking that disposable income, putting it into an investment, and then just continuing to rent.
Yeah.
And then in Southern California specifically, we see that in those dollars going in the Nashvilles and the Austins. And
I mean, that's
some
what
of
I've
the
done.
markets.
Yeah, yeah. Well, I haven't done a primary. I've only done investments
Yeah.
for that exact reason. It just it hasn't I think COVID was kind of like artificial growth, right?
Yeah.
And so I think a lot of people, when you're thinking about especially the starter home market, right? Like if you're not planning on keeping that property for 10 plus years,
Yeah.
if you're like, oh, I'll have it for a couple of years and then sell it, it's like, yeah, buying this starter home is a little bit more difficult in today's market.
Yep.
So it doesn't make as much sense as renting, especially when you're paying double the mortgage. But yeah, if you're planning on keeping it longer, I think it's obviously a way better investment to do that. Or if you're buying an investment property,
Yeah.
because then you can kind of like start to slowly like kind of get income from the property over time and replace work income, which I think will set you up better in the future. So
Yeah, younger generations too really value time,
yeah,
right?
Yeah.
Versus, the grind. Like I
Yeah,
think about my mom and dad and their parents and stuff. It was like you grind to buy a house. Younger generations are like, I don't want to grind. I want to travel, but I also want all the income, right?
Yeah. They're starting families later, and that's not the priority anymore.
Yeah, I mean, but so let's dive into the Airbnb thing, because there's one other piece though that I think is also important. There was a window of time where, depending on the state you're in, there was also a short-term rental depreciation credit. So, tacking on to the fact that some people don't want to buy a primary residence, you buy a primary residence, you got your mortgage, your insurance, your property taxes, and then maintenance, right? But you don't really get to depreciate that purchase on your income taxes. When you buy an investment property, then you get to depreciate the asset. In a long-term window, if you put a long-term rental in to play, then I think it's 28 and a half years in California right now. You can depreciate it over the course of 28 and a half years. I don't know how the scale is. You probably know better than I do, but at one point a year or two ago, there was a credit that allowed you to depreciate that short-term rental over the course of 8 years or 8.5 years.
You can actually do 100% bonus depreciation of short-term rentals if you have like qualify for the loophole.
Yeah.
Which is like qualifying either as a real estate professional or something called material participation. So you put in a certain amount of hours working on your property. You have to log it, and we have like log sheets we give to investors if they wanted to qualify for this. You also have to pay to get a company to come in and do a cost segregation study. So it's usually like $2,500 to $5,000. They'll go in, they'll do this, they'll show you everything you can write off, and you can get like a massive tax write-off against earned income. And that's huge.
Generally, the cost segregation essentially is they look at the land basis. So they're segregating the value of the land versus the physical improvements, and then they allow you to write off 100% of those physical improvements, not the land.
Exactly. Yeah. So if you put furniture in it, things like that, you can write it all off and front load it.
Yeah.
If you don't use it all, I think it rolls over to the next year. So you'll eventually be able to use it, but yeah, front loading it is nice. But also, you need to be conscious that you're buying this for a multi-year, because if you end up going and selling it, you're gonna have to repay back.
You pay the cost
all that cost seg stuff. So yeah,
you're kind of kicking the taxes down the road a little bit.
Exactly. Yeah. So
outside of the normal depreciation, right?
Yeah, you're front loading it, and that is the benefit specifically for short-term rentals. So investment properties, you still get like depreciation benefits and all that, but short-term rentals specifically, you can get like a huge tax write-off year one.
Have you ever seen somebody get stung on that? Like saying, hey, I'm going to go and take this credit?
If they're not doing it correctly, like people are a little bit unaware of how to qualify for material participation. So if they're not following the normal process of it, they're not going to qualify for the bonus depreciation. So you have to do it right. If you're hiring a property manager, for example, you need to be able to show 100 hours more than the property manager that you put into the property.
On an annual basis? Or
on an annual basis. On an annual basis. So what we do, don't I don't want people to go and do this, but we have a sheet where we basically split up hours between our entire team.
Got it.
So our max amount of hours, I think, between one of our team members is like 30 hours.
Got it.
So all you have to do as a real estate investor for the short-term rental is do 130 hours. And that could be researching, it could be going to the property, that could be traveling to the property, it could be like whatever it may be. There's tons of different things you can do to qualify hours, but you have to do that.
And that's something that you help your clients with?
Yeah, we have a sheet.
Yeah.
You just have to record it as the owner.
Right.
Yeah. So like, hey, like I looked up furniture for the house. I did this, and just start recording it. As long as you have that sheet, you have like basically proofs that you qualified for material participation.
So I don't want to go down this like rabbit hole, but the way the U.S. tax system is built, which I don't think the average consumer thinks about, it's a disclose and trust system.
Yes.
Right. So the U.S. tax system basically says, at the end of the year, you're going to fill out a form and you're going to explain to us what you think you should be paying in taxes. And then, you know, we're going to audit a certain segment and see if you're being honest. It's an honesty system, honest-based system.
Yeah.
So those logs and things you're talking about are really to protect that investor in the
Correct.
event that they got audited.
Correct. Yes.
But there's probably bad actors out there just going crazy. If they don't get audited, they're fine. And then the minute they get audited, they're in trouble.
Yeah, then you have to pay penalties and fines and all that stuff if you get audited. And then you have to also go back and like try and build your case, which takes an incredible amount of time.
Yeah.
So you don't want to get caught in that situation. Just having that sheet, it's really easy to log it over a year's period. And then you just keep it kind of saved somewhere and with all your property documentation. And if you ever need to use it for an audit or something like that, you just give it to them.
On that tax note, did you know the first time I got taxed in Spain, that I was like, wait, what is this? Like, I didn't submit anything. You're just telling me what I have to pay and what I owe. They literally send you something like through your bank and they just send you a form and like the amount that you owe. And then you go to your bank and you pay it.
But it would be, is it based on income or assets?
Yeah,
or what is it?
I mean, it definitely is. I think if I had income there, or if they, you know, I mean, talking loopholes, it's like if I spend a certain amount of time there and they know that I'm working for, you know, my company here, then I could potentially owe on that there.
So you pay
but they
taxes
would
in
need
both
to know.
markets?
I would have to pay taxes in
Oh, wow.
both markets. So
That's expensive.
it's
There's so, especially in short-term rentals, there's so, I mean, cities, states, everyone's so bad at like figuring out like the tax situation. How do we collect it? How do we account for it?
Yeah.
I see this with a lot of cities, especially I'm in San Diego, you know, where there's like specific sub-markets in San Diego that have their own specific tax structure. Some of them you have to send a check. That's the only way you can pay taxes. And they have no way of knowing what you actually generated. So it's like similar to what we're talking about with the IRS. You just basically say, this is what I owe based on what I collected. And they're like, there's no like checks and balances system or anything. So we keep logs of everything and we like pay taxes on behalf of owners. But, you know, if you're not doing that, you get tagged pretty bad.
One more question before we dig into all your stuff. So in the past, if you're managing an asset for somebody that, you know, for an owner investor, the person that's going to go and stay would go to Airbnb or VRBO or whatever. And I don't know if this is true, but I was just looking at like a credit card rewards deal and looking at planning a trip, and there were like penthouses or physical, you know, single family residences through the credit card
Was it
rewards
Capital
system.
One?
I don't know.
Okay. Capital One has something with like Hopper and you can
So
like,
those are short-term rentals that you can book through a credit card reward system.
Yeah, everyone that does it too like doesn't know that it went through Hopper, so they're like trying to make changes to their reservation and everyone's like confused. But yes, you can book Airbnbs, or not technically Airbnbs, they're Hoppers through the Capital One point system.
What?
And then we get a
Pretty
points
cool.
value
Oh,
disbursement.
you do?
Yeah.
But you get paid in cash, obviously.
In cash. Yeah.
Okay.
Yeah. So like
They're
they'll literally
giving you points?
they'll pay the rate basically with the points.
Got it.
I mean, it's nice
Is
for
that
us.
good? Is
But
it created any lift at all, or?
yeah, no, it's great. Like we do get a lot of bookings with Hopper now, but it's just if there needs to be any modifications at all, it's like if you book in any like Chase Travel,
Like,
American Express Travel,
They
it's
have to
always
go
hard.
through the
like
credit card.
Yes, they gotta go
booking.com or like anything, you're having to jump through hoops.
to make any modifications.
So has that made a huge turn on like your software and your value proposition to the consumer? Because you now have to manage another portal, or?
No, because we link it all into one system. It's just it helps fill gaps in.
Got it.
You know, we always in the short-term rental like management world, we're always like, does it make more sense to just put all your eggs in the Airbnb basket, or is it better to have like a multi-channel marketing strategy? We have a multi-channel, but sometimes like if you have too many of them, it's like you want to adhere to the platform that's going to get you the most bookings and the algorithm that's going to get you the most bookings. So if you start blocking out dates because other booking channels are booking, Airbnb's algorithm is saying, oh, this property's never available.
Right.
So you're going to be like devalued.
That's the similar argument with Uber drivers that also drive for Lyft. They have two cell phones and they're like trying to switch back and forth to stay occupied or whatever.
Yeah, so we struggle with that a little bit. I'm like, maybe we should just put like most of our time into the Airbnb basket. So we quote like we're always showing up on the algorithm.
Does Airbnb get do they have the highest amount of market share?
90%, yeah.
Oh, 90.
90% of our
Wow.
bookings are Airbnb, yeah.
Wow.
Certain markets, like we have one we manage up in Park City, and that we get more VRBO bookings with the Park City one. So certain areas will cater towards specific booking channels, but San Diego and like parts of LA and stuff, I think the majority is going to be Airbnb.
Interesting.
Yeah, yeah. So, and they also tend to have like not necessarily higher fees, but they're just a little bit more difficult to work from a host standpoint. They tend to always side with the guests. Airbnb.
Oh, Airbnb.
Yeah, yeah. They just side with the guests more and things like that.
Really?
It's we don't have to go down the rabbit hole on this, but like it's just one of those things where like no matter how professional of a host you are and how much you try and like solve problems and things like that, like the guests just kind of get the ultimate say.
Yeah.
And we have like refund and compensation policies and all this stuff where we like make them sign it before they stay at our property, but it's still really difficult to, try and work with guests that complain about issues, which a lot do.
Yeah.
Yeah. No matter what it is, just like there could be cobwebs in a rafter that aren't even like accessible and like they want a refund.
Yeah.
So.
Yeah. Okay. So I have some questions.
Okay. Hit me.
Because, in the real estate world, as agents, we're constantly coming across people that, oftentimes they want to buy an investment property, but they have themselves in mind as well. Like I want a property that I can go to, but then when I'm not there, I want to rent it out to others. So, what are you encouraging in that situation? How are you, because you work a lot with real estate agents, that's how you generate business and find your clients. So how do you navigate that? How do you find the right property for your client?
Yeah, we kind of create, actually, this is probably the best question just because we spend a lot of time working with agents and their investor buyers. And so it started with just being like, we'll help the agent with everything. And we spent a lot of time talking to investors and like going and looking at properties and analyzing properties. And then we realized we're spending a lot of time kind of spinning our wheels with it. So we created like investor profiles.
Oh, like the real estate world.
Yes, of course. I know you guys do the same thing. Yeah. And I was like, this is sucking up a lot of time. How do I be more transparent up front so we can kind of start on a better place to get them what they want? And so we created investor profiles. So like one investor profile is like, I'm literally buying this as an investor. I'm going to put a certain amount down. I don't want to stay at the property ever. It's literally like a cash flow type thing or whatever my goal is, right? Second one is like, I want to stay on the property part-time of the year and then I want to rent out the rest of the year. The third one is more like going to be like the luxe buyer that has cash. That's like, I'm just trying to like park money somewhere. I don't necessarily care. I want a good area, desirable area. I'll use it once or twice a year, but those people can pretty much buy anything. But 1 and 2 are where most of the majority fall to. So we have to determine what buyer they are. And we created like a whole investor questionnaire around this. So you can go on and you could say like, my budget's this, I'm willing to put this down. These are my like areas I want. The one we have now is specifically for San Diego. And then it will give you like 3 areas in San Diego to buy based on your goals and your budget and all that stuff. And it'll tell you what type of property to look for, what type of amenities to look for, things like that. So it kind of analyzes it for you.
Got it. And so I guess the question is because, people hear there's so much chatter about on Instagram and TikTok about buying Airbnbs or buying properties to Airbnb. So, what is one of the biggest myths, I guess, that we should talk through that people maybe think they have the expectation when they're purchasing an Airbnb, but it's just not reality?
Yeah, I think the biggest myth is just buying in a desirable area. Like people just think automatically if I buy in a desirable area, I'm going to make money. And that's couldn't be further from the truth. Yes, a desirable area is important, but it's only important if you fit into the buyer profile for that area, right? So I'll give you an example. So Pacific Beach in San Diego tends to be a desirable area that people want to buy in. However, I get so many investors that come to me that say they have like a budget of $750 to $1 million, right? And in Pacific Beach in San Diego, you can only buy like a 2-bedroom condo, usually in a HOA community that doesn't allow short-term rentals, for that type of price. So it doesn't make sense based on your goals.
Right.
So with that type of budget, you need to buy in other areas, right? that gets you what you're looking for with your money, essentially. So don't look at the area as much as like, what are you trying to accomplish with your investment? I think that's the
Yeah,
biggest
my
thing.
guess is that your average first-time investor comes in and thinks, "Oh, this city looks cool, and I want to own
Yeah.
something there."
Yep.
Not like, "Hey, what's my cash-on-cash return?" or "What's my return on equity annualized going to be?" Or
100%.
do they think about it from like a cap rate, or your average investor? Are they thinking cash-on-cash or cap rate, or
I
what
think
are they
they're
thinking?
thinking more like cash on cash return. Yeah. And, you know, a lot of them actually are fairly sophisticated in terms of like knowing where their break even point is and all this stuff. And, you know, it's just a matter of getting, yeah, once again, it just goes back to like budget goals, right?
Yeah.
That's what I try and get to is like, what's your budget? What's your goals? And then, especially in vacation rentals, you can have a big swing in revenue generation on a property. It's not like a normal year-round rental where it's going to rent for $4,000 a month every single month. I mean, you could have that same property could do, you know, 4,000 one month. It could do 10,000 the next month. It could do 2,000 the month after that, right? So you're gonna have these big swings. So you have to be really conscious of what you're putting your money into.
So you said something interesting. So you talked about how it's not about the area, but and that's not really like the money maker. But
Yeah.
what are some money makers? What are some things that people should be looking for if they're, interested in this?
Yeah, the number one
avenue?
thing is think about why people travel to your city. Okay. So like for San Diego, for example, why are people traveling to San Diego? Okay. Yes, they want to go to the beach. That's a given, right? They're going to go to the beach. It's close to the beach, right? Especially if they live in like, you know, the Midwest or something like that. But they're also going to San Diego potentially for Balboa Park, for the zoo, for the gas lamp, for Coronado, right?
Does
So
anyone still go to Gaslamp?
yeah, surprisingly, I know. It's not the most desirable neighborhood, but
Don't know.
the people that don't know, yes, yes. But it's like like when I go to other
Have you
cities,
been to Gaslamp lately? Like,
No, it's been a long
yeah,
time.
I
I ran the marathon.
I don't go there
I went
either.
there. Yeah, I did.
Okay.
I ran the San Diego Rock and Roll Marathon, and we had lunch after in the gas lamp.
That's about yeah. That's typically where I will venture down in there for daytime only.
day.
Not
Exactly.
nighttime.
Yeah. Oh, I don't think I can't remember the last time I was there.
Oh yeah,
Maybe never, actually. I
I
don't know.
don't want to leave the area. I can't leave my hotel at night. It is terrifying. It is terrifying.
Yeah, it's pretty bad now, which is sad because it used to be
Terrifying,
so
like-
desirable.
Crazy people, or like
yeah.
Crazy
homeless
people, yeah.
people, or
Yeah. Yeah. My friend and I say all the time, it's like it lost its soul. I think I was telling you. It's like soulless.
They started
like,
blocking
it's-
off streets in Gaslamp to make way for like civilians to go through. All it did was create more homeless in these areas. So it didn't actually make it like a fun vibe. It just created the opportunity for like more kind of, I don't know,
dumpster
sketchiness going on in that specific area.
My friend was walking through, I think this past weekend, and he was saying that he's like, I just made it through Poop Alley. Poop
Alley?
Like, it literally, like the entire
that's what they call it.
alley. I mean, that's what he called it because it was like human poop everywhere.
Yeah, third world
like,
country in
it
some
was
areas.
crazy.
Really?
So
Well,
anyway.
people that come to San Diego, yeah, they don't. It's like when we go to other cities and we do the same thing. We go to areas that like other people, like if you go to San Francisco, they'd be like, "Why did you ever go there?"
Yeah,
You know,
yeah, yeah.
No one knows better, but
Yeah.
yeah. So
Okay, so
back to
people
the
are
investment.
going to Gaslamp.
Just focus on buying in areas where you can get a property that fits into your buyer profile, like you know, the amount you want to put down, how much you want to generate, all that stuff, but it's still within a reasonable distance from those areas. So I think if you're in 10 to 15 minute range, you're in like a good range. And what we do with all our listings, especially if it's a property that's in that kind of like 10 to 15 minute range, is at the start of the description of the property, we highlight that.
Within 10 minutes.
With it,
right?
yeah, we want someone looking at it instantly going, I'm going to be 10 minutes from downtown. I'm going to be 15 minutes from here, 15 minutes from the beach, 20 minutes from the beach, whatever it may be, just so they know, okay, like I feel good about this property, even though I know it's not maybe right in Pacific Beach.
Well, I think
Right.
I think the clientele is different too.
Yeah,
Like
yeah.
if when I think about trips that we Airbnb every once in a while with
Yeah.
my wife and two daughters, if we go to a city, I would way rather have something 8 minutes outside of the city because I know all the craziness is in the city.
Yeah,
so
Yeah, parking and
yeah, and so
Yep.
but if you're making an investment, you probably want. I mean, you probably get booked less if you're 10 minutes out, but you're going to get a client that's not throwing like a rager and
True.
you know.
Yeah.
Although my daughter can write on walls with crayons.
Yeah. Yeah. Well, that goes back to the next thing, which is always say like buy bigger. Bigger is better usually.
Yeah.
It does.
A bigger house.
Yeah. It does lend itself
More
to parties, right?
Sure.
That is a risk. But if you're buying, I would say, less desirable neighborhoods and you're buying a bigger property, especially when you talk about California, it has such a small competitive landscape for 5+ bedrooms.
Yeah.
So if you're buying in there, you're already going to stand out from the rest. And the difference between a 5-bedroom in a less desirable area, like a city, and a 5-bedroom in the most desirable area is like thousands of dollars a night. Okay. So you can still make the numbers work if you're outside of the desirable area with a bigger property, because people are like, oh, I can stay here for $800 a night. If I want to stay in Pacific Beach or a coastal town, it's going to cost me $3,000 a night.
Right.
So it's just, you have a different type of renter, I guess.
Have you ever had, there's a whole network online too about this, but there are these investors that are not really investors, but they are going in and signing up to take a 12 or 24-month lease and then turning around and
Oh yeah, arbitrage.
doing Airbnb. Yes.
Yeah.
So
We
have
started out doing that.
Oh, you did?
Yeah.
Okay.
We start our
Is that still a thing?
Tumo Stays started as arbitrage, and it is still a thing. There is still people doing it. If you're getting ads online on Instagram telling you to sign up for a course to do it, please don't do that. It is not something that I would jump into today if I were getting into it. I think there's too much risk associated. People that were doing it during COVID got kind of screwed, especially because you're signing a lease with an owner.
Rent either way. Yeah.
Yeah, for 24 months sometimes or more.
Yeah.
You're saying I'll pay you X amount per month. If the market goes sideways, if something happens, like you're still on the hook for that lease. You're not just getting out of that lease.
Yeah.
So you could put yourself in a really bad situation. And the other side
You have
of
to
it
be super confident in your ability to get
Okay,
it.
how did it work out for you?
it was fine. We just found the other big issue with it. In terms of risk, we were fine during that time we did it. The risk that we didn't like was the discrepancy between what the owner's responsible for and what we're responsible for as running it as a business. There was a lot of kind of friction there.
Yeah.
So we just had like an issue with the owner where the AC broke or something, and we're like, the AC broke. Oh, well, you need to fix it. And it's like, this is your house, not our house. We're not fixing your AC. We're technically a renter. And then he's like, okay, I'll fix it, but my guy can come out in like a week and a half.
Yeah.
And I'm like, okay, well, we need someone there tonight.
Yeah.
Yeah.
So it was just everyone's like
Kind
expectations
of at the
are different.
mercy of
Yes.
personalities and yeah.
And you also have to furnish the house, right? So you're spending 10 to 20 grand furnishing it, which, takes a while to get your investment back. You only get your investment back on like net over lease amount, right? So if you're renting for 4,000, you're not making 6 to 7 grand net. You're not going to pay back your initial investment for like a year.
Right.
So yeah, you have to sign long-term leases, aka risk, and you have to invest a lot up front. Another thing I don't like is people are telling people to get like credit cards and put a bunch of money on credit cards to pay for the furniture. You're just like building more and more risk for the potential market to go sideways or something to happen and people not actually go and rent. And then you're underwater every month. And you don't own the property. You're not even getting the benefit of,
Appreciation or appreciation. Yeah.
It's crazy. So you don't get either. So yeah, it's just not a smart area to play in. If you're going to get into short-term rental, just get in as a manager or a co-host.
Yeah.
And go property by property and just add to your portfolio, and you can slowly kind of build income there. So
yeah, it's interesting. Have you ever thought about applying a portion of your property management fee to the appreciation of an asset?
we not that specifically, but we've talked about trying to put a model together where we can leverage our management fee to get equity in a property.
Yeah.
So because it's hard to buy a property and make cash flow, if we could manage a property for zero management fee for an investor, they could make cash flow potentially, and we could get a small percentage of equity, like just sweat equity basically, for managing it. So that's still an interesting model. We have not done it yet, but if there's any investors out there, we're down to try it. Yeah.
Cool.
So it would be, I don't know, it would be interesting. And we could manage like everything from design all the way to managing it day to day. And the investor wouldn't really have to do much other than put forth the capital.
Yeah.
Yeah.
It sounds like you have really nice business, a great business. What do the next 3, 5, and 10 years look like for you and
Yeah. Well, I mean,
Tumo?
it depends what happens with the market, but as long as it stays consistent and stuff, continue to grow our portfolio. So, we want to get to 100 units. That's our next goal.
Awesome.
And then from there, we'll just kind of build the next goal and build the next goal. But we also, as we get deeper and deeper into this space, we start to realize where some opportunities are to help hosts nationwide, worldwide. Like, where can we define tools or things like that? I mean, we're living in a world of AI now. Like, what type of tools can we create to support the vacation rental managers around the world? And that's interesting to me specifically. I'm like, we could build, our portfolio and management, and then also have like a side business to help support us as managers, but also other managers.
Yeah.
So that's where I want to go with it is create a tool.
Yeah. So. And we were talking a little bit before, but if you were to say like the top 3 mistakes the first time investor makes, what would those be?
Yeah, I think number 1 is they get themselves into a bad deal. So that's just like, I see that all the time. People call me like, I'm like, what's your, your PITI? What's your all in monthly? And they're like, it's $7,000. I'm like, your property's going to net 4.
Yeah.
So you're already underwater, right? So that's bad deal is number 1. Number 2 is they always try and cheap design. If you are going short-term rental, like if your budget's $1 million, make your budget $900K and save an extra 20 or 30K for design, because there's no world where the design is not going to pay off if you do it right.
Yeah.
Okay. So anytime we're going into a market, and I suggest other people that are buying vacation rentals, if they're using a manager or if they're in a different market, like just spend an hour online looking at create a bubble of your area, look at what the other Airbnbs have, and start just manually writing it down. Just go, okay, this one has a pool, this one has a spa, this one has whatever, right? And then okay, if I'm going to stay competitive in this space, these are the things I need to add to my property in order to do that. So that's something that I think we're in a world of automation. People don't want to do the manual work, but that manual work will pay off. So yeah, just invest in design. And then the third one is hire a property manager.
Yeah.
I truly don't get people that self-manage one property. Every single time we've taken over for a self-manager, we've earned more than our property management fee in additional revenue. Yeah. So yes, you have to hire a good one. I'm not going to say just hire any Joe Schmo on the street with a cheap management fee, but hire a good property manager that has good reviews, and maybe they have a referral from someone, whatever it may be, because it will pay off and you won't do the work of managing it yourself.
Yeah.
There's so much that happens in these things. And we have a whole team of people overnight, during the day. We have a full-time revenue manager that's managing pricing strategies. We're like, it's put on multiple booking platforms, managing the calendar. So it's just, if you want to do it right, do that. So awesome. Those would be like the 3, I guess. Was that good?
That was good.
Yeah.
Before we close, because I know we're getting to time, we have to know what your craziest Airbnb story is, because I feel like
there's got to be.
I know you've got it. I know you've got it.
Oh man, we have so many. I was talking to you guys about this. We're kind of like putting together like all our stories. I have like a ChatGPT thread of like all the stories. So anytime something comes in, and there's a picture or something, I upload it into the thread and I like tell the story about it, and it's starting to build these stories. Yeah, vacation rental nightmares.
It's gonna be a book.
Yeah, we're thinking. Yeah, it's a fun idea to make a book of all the vacation rental nightmares and like put it as a coffee table book or a bathroom
in the
book
vacation rental
in all our vacation rentals. It'll be like our thing, right?
It's like, don't do this.
Yeah. And there's been some very inappropriate ones we found. But just recently, we had a property this is a small studio in a beach town. Like, this is 2 blocks from the beach. And our cleaners went there and opened one of the drawers, and there's like guns in there, bullets and all this stuff. And we're like,
no.
And they sent a picture of it. I'm like, how did this possibly get left in this property?
How do they forget that?
Yes. And so I'm like thinking,
drug deal gone bad.
The first thing I go into my head is either that, I think they killed someone and just this is the evidence.
Oh, yeah.
So I'm like, now
they book an Airbnb to hide their evidence.
Yeah, I'm like, do not touch a thing in that Airbnb. Leave the Airbnb right now. We're calling the police. The police are going to go over there and extract everything. I don't want anything touched in this property.
Did you have another stay coming?
Yeah, we had another stay coming too, but they got out. We called the police. The police came. They like took the thing away. We tried to call the guest too and like be like, hey, like try trying to
Hey,
understand.
you left your gun.
And they never responded to us. We have no idea still to this day. So that was pretty
So you
weird.
don't know what happened?
Still don't know what happened. They just took the gun and everything away, reported it, and then we went in and cleaned the unit and got it ready for the next guest. It was crazy. But we also had a guest that disappeared from a property. Like fully disappeared. All his stuff in the property never came back to the property, never got it. We're reaching out to them. We're calling. Nothing ever. We still don't know to this day where this human being is. We reported their
like
name.
a death report? Or
No, we
anything?
reported their name to the police. They like couldn't find the name or
How
anything.
long ago was this?
This was like probably 8 months ago.
There's going to be a special. There's going to be a special on TV.
We
Like,
left their stuff out. We're just like, hey, your stuff's outside now. Like it's all folded up. It's perfectly in the suitcase you brought. Like if you ever want to come back and get it. We left it out there for probably 6 months. Nothing, still not picked up, and then we just finally tossed it.
So that person either died, maybe they were abducted by aliens.
Could
Could have been
be.
abducted, or they're like, I don't know, went across the border or something and never came back.
yeah.
I have no idea. Yeah, it's just it's wild. But yeah, those are two like standout ones, and then there's some funny ones too.
Wait,
But
sorry, last question for me. Do
Yeah,
you have
yeah.
international listings? Do you have properties outside of the U.S.?
we're launching one in Cabo, so we will have our first international listing coming, which we're really excited about. It's actually a buddy of mine's property, so yeah, that's gonna be a cool one. It'll be our first kind of attempt at doing international.
In your agreement, you say I get 1 week
Yeah, yeah.
to see if I want to manage this.
We actually are not good at doing that. Me and my business partner were talking about this. We have not stayed at any of the properties that we manage.
Really?
And I'm like, Sarah, we have so many cool properties. Like, why do we not just like every once in a while? Also, as property managers, it's good to stay at them because you kind of understand
you
what
get a feel
what
for
the needs
area.
are.
Yeah.
What can we fix? What can we
Mexico
add?
would make sense, but like
Yeah.
2 miles down the street in La Jolla or whatever, it's like.
But we have Sedona, we have Park
that'd be
City, we have Florida. So we do have some different markets, and we haven't stayed at them. So yeah, we need to be better at that. So
Well, happy to be here. Happy to be your test dummy.
yeah, we can do that too. We could just have like friends and family stay there and just tell us what would they would improve and all that stuff. Yeah.
The way to go.
Yeah, we need
Sorry, I
to-
have one other question. How do we or how do our listeners help Tumo grow and get to your goal of 100 by the end of the year?
Yeah, so you can follow us on Instagram, Tumo Stays. You can go to our website, tumostays.com. Actually, if you are an agent and you have an investor, specifically in the San Diego area, we're going to build it for other areas like LA and things like that. But you can go to tumostays.com, go to the bottom. There's an investor questionnaire button. Just click it, and you can have your clients go through the investor questionnaire.
Oh, cool.
And they can put the agent's name and their information, and it will send you what they filled out also. It uses AI. It's tied into all our Airbnb investment or analyst websites, and it really gives them the best starting point of where and what type of property to look for based on their goals. So yeah,
Okay.
Awesome.
cool.
All right.
Thank you.
All right, thanks. Appreciate it.
That's
Yeah.
right.
Airbnb and Braydon.
Airbnb Braydon. Yeah. Self-proclaimed.
Good. Is that your Instagram handle?
No,
should
I did take the Instagram handle. I have not put content on for it, but I did. Someone called me this one time, and I was like, "That's so funny." And then I went on like Gemini or one of the AI things, and I told it to make me a logo, and then I put the logo on my business card, and I was like, "It's a little bit more memorable when you meet someone at a networking event, and they like kind of have like a little brand around their name." So
Yeah.
it's been cool.
Okay.
Awesome.
Yeah.
Well, thanks for making it up.
Yeah,
Congratulations on your business. It sounds
thank you.
like an awesome, very thoughtful approach to a segment that obviously is needed.
Yeah, we started out as investors, so we think about it from that lens always. That's why we built the investor questionnaire. That's why we care about like working with agents and getting their investors in the right property, because we know if we do that, the investor is going to come back to that agent, buy more properties, it's more
Right.
revenue. So we're always going to be like fully transparent with your investors. I mean, that's one thing that we're going to stand by is like honesty and integrity, even if it doesn't make sense, right?
Yeah.
We gotta be honest about that. So
I love it.
cool.
Well, thank you, Braydon.
Thanks, guys. Appreciate
That is
it.
a wrap this
Yeah.
week. If you haven't done so, please hit the subscribe button on the screen. Give us a follow on all the socials, and go buy an investment property in San Diego with Tumo.
Please.
Thank you.